What Islamic investment accounts offer venture capital? If you are curious about how Islamic investment accounts can support new businesses, you are in the right place. Let's break down how these accounts work in the realm of venture capital. Islamic investment accounts that provide venture capital follow Sharia-compliant structures. This means they focus on equity participation and profit and loss sharing. They avoid interest, known as riba, and do not engage in activities that are considered haram or forbidden. These accounts typically invest in businesses that align with Islamic finance principles. They focus on halal sectors, which means they steer clear of companies involved in alcohol, pork, gambling, or excessive debt. At the heart of Islamic venture capital are contracts like Musharakah and Mudarabah. In a Musharakah contract, both the investor and the entrepreneur contribute capital. They then share profits based on a pre-agreed ratio. If there are losses, these are shared according to how much capital each party contributed. This setup allows investors to take part in business decisions actively. On the other hand, Mudarabah involves the investor providing capital while the entrepreneur manages the business. Here, profits are shared, but losses are solely the investor's responsibility unless there is negligence involved. Islamic investment accounts that offer venture capital are often structured as equity-based funds. These funds invest in startups or small and medium-sized enterprises that engage in halal activities. They avoid companies with conventional debt or interest-based financing. This aligns with the Islamic goal of promoting economic development and fair wealth distribution. Islamic banks or investment firms may create dedicated venture capital funds. These funds pool investors' resources to finance Sharia-compliant ventures. For example, funds established under Musharakah or Mudarabah contracts allow investors to become partners in promising businesses. These accounts emphasize ethical investment, risk sharing, and social responsibility. They align with the principles of Islamic finance, ensuring that investments contribute positively to society. In summary, Islamic investment accounts offering venture capital utilize Sharia-compliant contracts like Musharakah and Mudarabah. They invest only in halal sectors and exclude companies with excessive conventional debt. Profit and loss sharing is based on Islamic principles, avoiding interest altogether. These accounts focus on equity participation in startups and small businesses, promoting growth and economic fairness. They are often managed by Islamic banks or specialized firms with Sharia supervisory boards to ensure compliance with Islamic laws.